This was predicted. You know why it was predicted? Because, as I mentioned many times, times are changing. And because times are changing, it doesn't make sense to be short certain pockets of the market anymore, because what is coming ahead of time is going to be dangerous if you don't switch that strategy. As a matter of fact, Melvin Capital, which started a short positions on GameStop and got hurt twice, has now announced, according to the filings to the SEC, that he's looking to raise money in order to launch a new hedge fund after a year of double-digit losses. This is going to be interesting. So if you don't know who Melvin Capital is, this is a hedge fund that started and lost almost $7 billion last year by betting on GameStop, all right? So they thought, well, because of the pandemic, all of these brick and mortar companies are going to go bankrupt. But retail investors came in and just scooped and squeezed them out. And that's how they got hurt. But what is funny is Citadel Securities gave an additional $2 billion a couple of months ago when, in order to kind of came to the rescue. But even so, last year in 2021 and the last quarter, it didn't help because they were still losing a lot of money. All right. So that's why the guy is now saying that the new fund will be called Melvin Capital Long Only. So we are switching gears. We are switching strategies because it doesn't make sense to be short on pockets of the market that are going to hurt your business and kind of threaten to make you out of business. Close doors, because this is what he's looking at. That's why the guy is saying, you know what? I'm done losing money. Now let me go and have a long only, meaning we will set up a strategy where we only buy stock. We don't short them out. The fund's name suggests that he will bet stocks will rise, not fall, and that the portfolio will not be hedged. Now, the new launch come at a critical time because these guys, Melvin's founder, Gabriel Parkin, who had established himself as one of the Wall Street's most gifted traders before a band of retail investors ganged up on the firm last year to inflict heavy losses. This literally means that apes are winning, that retail investors are winning this fight against manipulation. This is just the bottom line of it. Now, what is even more interesting is that these guys know what is ahead, and that's why markets fueled by fears of rising interest rates and geopolitical turmoil, between Ukraine and Russia have already hurt Melvin and other hedge funds at the start of 2022. Melvin lost 17% in the first 3 weeks of January, according to a source familiar with losses. So again, it doesn't make sense to be short some of the pockets, some stocks in 2022, because what is coming ahead is going to be dangerous. So, it makes sense. It made sense. He tried to wipe out losses, which took a bite out of his record, but he had posted average gains of 30% a year between 2014 and 2020. I guess the party is over. So now, it's time to switch gears. What is even more interesting here is that, Melvin Capital was not the top of the short sellers in GameStop and AMC. Now, the thing is, the signal this sends out to the street, all right, especially with the new regulations coming out later in February, at the end of the month, it says, what do you expect the other hedge funds in the same situation, because they are also losing a ton of money? What do you expect them to see? What do you also expect other investors with big pockets that are looking for places where to make money work for them and continue to sustain high performance for their clients in 2022? Because they also risk their clients to move away, to get out, to get elsewhere. So it says, well, you other hedge funds out there still shorting AMC and GameStop, you better get your stuff together. Otherwise, this is what you're looking at. So if you ask me, this is pretty bullish.